Our next guest thinks core PCE will fall this month, which should be just enough to prompt a first Fed rate cut at the June meeting. JPMorgan Asset Management Chief Global Strategist David Kelly joins us now here at Post 9. David, always great to have you. Steve was just laying out something kind of different that we're seeing in the swaps market, which is a further delay in a rate cut. You still think June's on the table?
I think it is. It's getting closer and closer. I mean, we need to get, if we get one bad surprise on CPI, then it's gone. But I think the Fed should do it. I mean, I really agree with what you're saying, Mike. This is not about easing policy. It's about normalizing policy. Everybody should feel pretty good about where the economy is. We've got great momentum, but it looks like we're able to have strong job growth, strong economy, and inflation gradually coming down. That's great. But we have a monetary policy which is demonstrably tight. And it's not if the economy slows down. What if we get hit by some shock and the Fed then suddenly has to cut rates a lot? Whenever the Fed has to cut rates a lot, it never works out well. So I'd rather they get on a path of gradually bringing down rates once a quarter. Nothing going on here. People don't have to get too worried about it. Just bring rates down slowly so we get back to a more normal level. Because, frankly, the economy is performing well. It doesn't need monetary policy to be too tight or too loose right now.
So you're not too concerned by the risk that it's been pointed out by, certain hedge fund managers, bank leaders, and so forth, who have said that, the risk is that you ease too quickly and risk inflation rearing its ugly head. Do you feel confident that we've officially stamped out inflation at these levels?
I think core inflation is coming down. The things that are keeping core inflation high right now are shelter and auto insurance, and those are both lagging pieces of inflation, and they're going to come down over the course of 2024. So I think the core is going to come down. We could get a spike from energy, but that doesn't tend to last, and it doesn't tend to add momentum to the U.S. economy. So I feel pretty good about the idea that inflation is coming down. What's more, I don't even think that this tight monetary policy is really slowing inflation. But it is wrong for capital markets. You need to get to a reasonable level of interest rates. There's no reason not to, and I'd rather the Fed start in June than wait till later in the year.
We tried to get Lael Brainerd to talk about immigration, but it's obviously impacting the labor force in a good way. But is it not also slowing down the disinflation in housing that we otherwise would expect?
No, net, it is a positive for the economy. And it is a rich irony that people think about immigration and, of course, the chaotic way that immigration is occurring as being the biggest problem in this country, and it's absolutely a safety valve, because what we're seeing is these immigrants, once they get a notice to appear at a court, they may not see, for 5 years their case may not be decided, but they are now, after 6 months, eligible to work, and they're flooding into leisure and hospitality, into restaurants, into daycare, and that's filling in the low end here. It's allowing wage growth come down, as Steve said, to 4.1% year over year, the lowest since 2021. A lot of that's immigration. There is no way we'd be doing 275,000 jobs per month with wage growth coming down and inflation gradually coming down if it weren't for immigration. So once again, oddly enough, the United States is really being helped out by immigration, even though people think of it as our worst problem.